Welcome to another stage analysis video. It's Sunday the 30th of June 2024. Apologies for the delayed video tonight. Had the England-Slovakia game, so was watching that and it went to extra time, so a little bit delayed, but we've got through that by the skin of our teeth, so on to the next. But getting back to the market, I'm going to start today's video with a look at some of the weekend watchlist stocks and some of the ones that I posted on Thursday as well, and go through those in a little bit more detail before getting into the more regular member content as well. So starting with Tesla, which highlighted a few times during May as it started to move into what we call stage 4B minus. So if I come out of the weekly chart here and go into the daily chart on stock charts first, so you can see it's a little bit more close-up detail here. So starting to highlight it here through the May as it was moving into stage 4B minus, what we call that, and then this week has started to move up and out again to the top of the range. You can see there's this base structure that's been developing. So what happens with a lot of base structures that eventually turn into stage 1 is the vast majority of the base structure actually forms while the stock is still in stage 4. So the change from stage 4 to stage 1 to stage 2 can sometimes seem very sudden, but you can see from the position we're at currently, just underneath the declining 200-day moving average, you can see we've now got a 4 or 5 month base structure. If you go all the way back to the earlier part of the year, they're almost 6 month base structure that's been developing, a little bit of an inverse head and shoulders. And if it does start to pop out through here above these recent pivot highs and the 200-day moving average, then potentially it could start to move quickly into stage 2 at that point. If we come back to the weekly chart on the Stage Analysis website, you can see the SATA score still very neutral for the last 5 weeks here. It dropped off a tiny bit back to a 4, still a neutral score, so it's been a 5 for the last 3 weeks in a row. You see down here in the SATA indicator itself, you see the amount of relative strength started to pick up. We've got a slightly higher high on this, but it's still below a declining zero line. But as you can see from the structure here, just picking up and starting to develop that base. So all of this area through here, it's giving a little bit of an inverse head and shoulder vibe to it. The 30-week moving average still declining, but closed back above that for the first time this week. So often the first close back above the 30-week moving average often signals the start of the potential stage 1. So at this point, it can often start to come back down again, and the base can continue to develop, start to build out, and may eventually pop out, may form spring, it may fail altogether. But the point is, this is the point at which the base structure that's been developing in stage 4 is technically now marked as what we call stage 1A. As I said, that could quickly change to stage 2, however, if it starts to break out through this area strongly quickly. But what often happens at the stage 2A point is it starts to pull back in again and start to pull back under the 30-week moving average once more and chop around in the broadening range. But with this 4 or 5 month head and shoulders pattern here, there is a chance that this could move out into stage 2. It's certainly in position. The SATA score of 5 here, it wouldn't take much this to start breaking above here. It starts to pop out. That would move the score up to a 7, maybe an 8. We'd have a quarterly breakout as well, so potentially could even pop to a 9 or a 10 at that point, and at which point we would be pushing into stage 2 breakout territory. The 30-week moving average would start to turn back up again. The 10-week would start to cross back over again. So we will see, but at the moment this is an interesting one from the group. So as the automobiles manufacturers group has been fairly weak. You can see the stocks in the group here. So if you click on the sub-industry name here on the page, you can get the rest of the stocks up in their scores. You can see Tesla's been rising up the scores. If you actually go into the automobiles manufacturers page itself, you can see the weekly change as well. So Tesla, no change, but you can see some of the others, RIVN, Rivian, moving up +2. You've got +4 on Ford this week. General Motors down slightly. It's been leading for a while here. But you can see the majority of the others have still got fairly weak scores, and you can see we're only down here in the mid-range. I think we're at about 18% at the moment, with the percentage of stocks above on a SATA score of 6 or above at the moment. This starts to pop up through the 30% level here. That's when the group theme starts to kick off. And Tesla, pardon the pun, is often a driver for the group, being one of the larger stocks in the group. So when Tesla starts to move, we see some of these other, especially the EV stocks, start to get underway. So your Lucid, your XPEV start to move when Tesla's on the move. So you can see percentage above the 30-week moving average has popped up as well in this group. Again, look for a move through that key 30% level there, ideally starting to push through the 50% level and start to get a group theme on the go. But at the moment, in position in the lower zone to start to improve. So if we come back out of this again, back into the stocks, what's up next? Ford also, as I just highlighted from the group, so it's been going sideways for the most part of the year. So while Tesla's been developing its base structure, Ford did make a stage 2 breakout attempt, but it's made very little progress since. It's practically at the breakout level still after 5 months or so. So we go into a weekly chart of this. Actually, we come back into here, we can take that and get the stage analysis chart up on here. You can see the SATA score has been improving over the last few weeks here. You can see we've moved from up to a SATA 6, so from a weak score to a strong score, but just on the borderline at the moment. So this could potentially start to move back into stage 2 in earnest. It hasn't failed in stage 2 yet. It's right on the borderline. So the stage 2 breakout point was around here. So investor stop loss would go around this area. So although it dipped back below a few times, still holding that range after that 5 months, but did obviously have a little shakeout in the last month or so here. So we come back to the daily chart. You can see looking for a pop up through this 12.7, 12.8 area, start to move potentially into stage 2 in earnest again. Citigroup, so just moving through the plus 180R area again. There was lots of banks popping up in the weekend scans. So only highlighting a couple of those stocks, but not the most interesting of groups as such. But there was a lot of them showing up in the weekend scan. So definitely an area to look to. So if you come back into here, if you go to the sub industries or the industries, you can find the banks. So if you go to sub industries, you can go for the investment banking and brochures. All of the yellow ones are the financials. Or if we go to industries, get a little bit broader, you can see banks here. If we open up the banks groups, you can see lots and lots of pluses through this area this week on the group. So you can have a look at the various stocks in the group, and you can see there's been some big moves on some of these. So just pop in through. So you can go through that at your leisure. Where are we? Come back into here. So Citigroup looking for a continuation move at the moment, sitting right at the top in what we call late stage 2. So what was called stage 2B started to push out into stage 2 through this area. A little bit of a tricky one when it's got this massive ledge from the resistance over here. So had a big spring type move here, a shakeout. So what we call a terminal shakeout, starting to push back up and through again. So technically somewhere around this area was the stage 2 breakout point. We'd need to drop down to the daily and find the 200-day moving average there as well, and the pivot that formed above, but potentially was this point here. So at the moment it's been in stage 2 for a good 8 months or so now, starting to form a base structure, but there's no major change of behavior. There's a little bit. So we've had obviously the pullbacks through here starting to get a little bit more extreme. You can see we had a failed breakout attempt and pull back in well below the 10-week moving average here. So at the moment forming some kind of base structure through here, but still sitting in the upper part of it. So you've got buying climax or make reaction, secondary test type move at the moment, but this could still develop and could still push to further high highs. But if it does start to fall back below that 10-week moving average again, then this could potentially start to turn towards stage 3. But at the moment, still late stage 2, and we're still seeing the banks popping up and showing strength at the moment. So looking for a further continuation. JP Morgan, similar kind of thing, pushing out of a local point here. If we get the ATR levels on, you can see just moving above the plus 1 ATR level here, and the top of this sort of pivot from back in April did have a significant reversal bar at this point, which it hasn't yet managed to get back above. So still in this recent resistance range at the moment, but looking for it to develop and push, continue